Used to be that rising wage costs, labor costs were the principal. When you started to see that, you really started to see inflation, and not of a transitory sort. Is that what we're seeing in the economy now? And is that wage pressure going to turn into enduring inflation?
Well, certainly that is the greatest concern, and that's what we have to watch most closely. It's certainly, well, what I sort of see it as is it's, we're sort of hitting friction on reentry. As we all come back into the economy, we've unleashed pent-up demand and some $2 trillion in saving amassed, along with 3 stimulus packages that has unleashed pent-up demand while we're still spending on goods, pivoting into services, and businesses are trying to reopen mothballed facilities faster than they can get workers to show up, either because they're in the wrong place. I think that the mobility point that Steve made was really important, is that many workers are not in the places where the jobs are right now. And that's a problem, too. When you have high gas prices, you need higher wages just to get to those jobs. The question is, these frictions on reentry, before we hit a splashdown, our parachutes open, and we hit the cool waters of a splashdown, are they something that's a one-time sort of step function in wages? Or is it something where we see wages continue to compound upon each other? My own take is that it is more of a step function in wages. You're still seeing some legacy effect of the hazard pay that was paid out during the height of the pandemic, and the larger companies offering that hazard pay, but it doesn't mean they're going to keep ratcheting up their wages every year and every quarter going forward. And I think that's what you need to get, the kind of vicious cycle, and that's what we're looking for not to happen this time around. But, having these frictions, interesting, the New York Fed as well, they acknowledge that reservation wages, in part because of the $300 per week, are higher, but also people who are looking for jobs in those same surveys don't realize the jobs are there yet. And that gets to this point of them not being in the places where the jobs are, and the mismatch on that as well. The other issues, Steve noted, you guys noted at the top, that a lot of these jobs have come back in accommodation, food, retail, areas that were hit hardest by the pandemic. Well, those extra jobs listings from January 2020 doesn't mean we're anywhere near actually needing to hire more people. It's just reflective that we didn't have to advertise them as much. In fact, I recently heard a statistic from the hotel industry that said they were going through their cleaning staffs 3 to 4 times a year. The entire staff in terms of turnover. That's a lot of turnover before this all happened.
I was going to ask Dan this, Dan, but I'll ask it to you as well. I am curious, because this pandemic collided with a lot of millennial household formation. What about the women who don't want to go back into the labor force and don't have to, because now there are new ways for them to either work from home or be at home in a lower cost area? Maybe their husband has more commuting flexibility. What impact will that have over time?
Do you want me to go first?
Yeah, that's a big issue.
Sorry, Dan, go ahead.
Go ahead.
Yeah, listen, I think...
Go ahead, Dan.
Thank you. All these items, I think, are on the margin. There's no doubt that the economy looks different today than it did pre-COVID, and there's going to be pockets of differentiation, if you will, in terms of behavior post-COVID as opposed to pre-COVID. But as a general rule, we're talking, Kelly, as you noted, about 9 million unemployed people. They're not all different today than they were pre-COVID. Some portion of them fall into those 3 buckets I talked about before. And as Diane noted, there is a little bit of a mismatch here as the economy reopens. But the most positive takeaway is that some of those things are definitely going to fall by the wayside over the next couple of months. And so while there are some issues here in the short term, and perhaps some portion of the unemployed population is going to act differently afterwards than before, I think the things I talked about before, the COVID hesitancy, the generous unemployment benefits, if you will, when they start falling by the wayside, I don't see any reason why higher gas prices or not knowing there's a job are going to prevent the million-plus job reports that we thought would happen. I don't see any reason why they would prevent them from happening in coming months.
Shepard Smith here. Thanks for watching CNBC on YouTube.